Hello, everyone. Thank you all for joining Stablepoint's mid-year market outlook webinar. That'll involve starting with company valuations, and then we'll move into interest rates and the Fed. We have our new Fed chair. He was just on in the background on CNBC as well. Henry will focus on some artificial intelligence, of course, and the relationship there with inflation.
Well, on valuation, one of the biggest things that we take a look at are price to earnings ratios, quite 4 or 5 years. So by historical measures, the stock market is getting a little bit, I don't know if I'd say completely overvalued, but it is fully valued to the point where, at least in the S&P 500, it's about as rich as we've seen in the last 30 years. So I think from where we sit today on valuation, wanted to share that data with you and our general view that we should be optimistic, but cautiously optimistic.
So as we start to look out 12 months, we're expecting Fed cuts in the first quarter of 2027. We're going to start to see interest rate policy be much more accommodative to higher prices. Not suggesting that we shouldn't be careful, not suggesting that we shouldn't be disciplined, but if you're looking for a reason why the market's been resilient, new Fed chair, favoring Wall Street, potential data going to Fed cuts, and profit margins at a decade high.
Know what we own, be guarded around that, and have good expectations that we may have a couple bumps in the road here along the way over the next couple of years.
But we're clearly in a generational moment right now. AI has transitioned from a software coding story to a global infrastructure story, where we've seen some of those big Magnificent Seven names really lag.
We're about 120 days out, plus or minus, from the midterm elections. And through July, August, September, October, it would be crazy of us not to expect a heightened level of market volatility. Interest rates for bonds, the stock market, most assets will be bouncing around maybe just a little bit more. And there's good reason for that, right? We don't know what the makeup of Congress is going to be. We don't know yet what all of these individuals' policies are going to be around taxes and regulations and what that may mean for financial markets. So what you're seeing on the left half is the uncertainty play out in market volatility. And then what's really, really interesting to see is check out the right half of the chart. From actually the trend starts upwards of a month before midterms. But as you kind of come into midterms and then out the other side, that uncertainty goes away. Whether we like the outcomes or we don't, we know who's in power, what political party, what individuals, and we have a really good idea of what the taxes and the regulations, other moving parts are going to look like for financial markets. So I think over the next couple of months, we would just caution, know that there'll be a little bit more volatility in the market, not just the presidential elections every 4 years, but the midterms in between. Uncomfortable thing that I feel like a lot of us have forgotten about in the last couple of years is volatility.
So we appreciate the opportunity to step back and have these conversations with you and really dive into what we're seeing. And then also looking ahead, Stablepoint wise, I wanted to give everyone a little preview of what's coming ahead this fall. So many of you have attended or are aware of our big vision event in the fall. We're making a few adjustments this year, and we think it's going to be great to have actually more of an event series. So this gives more opportunities to attend